Welcome to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen, your host, and it's Wednesday, January 26th, 2022. We just got out of a Fed meeting. Some notes. Irusha and I will talk about that a little bit later, but let's go ahead and introduce Irusha. Irusha Pires is an O'Neill Global Advisors portfolio manager, and he joins me on the show every week. Thank goodness. How are you doing, Irusha?
I'm doing well, Justin.
Okay, and also returning to the show, we have Lisa Chai. She is a portfolio manager and research analyst at ROBO Global. Welcome back to the show, Lisa.
Thank you. It's great to be back.
Okay, and on today's show, we're going to spend a couple segments with Lisa, first of all, to talk about everything from autonomous driving to AI to gaming and Metaverse. I mean, there's a lot that she really can do a deep dive on. So we can't wait to hear about that. And then, as I mentioned, Irusha and I at the last segment, we'll talk a little bit about the market and any stocks on our radar. But first, Lisa, let's start out with the last time you were on the show with Irusha. You were talking a lot about this autonomous driving, and you had a white paper out, but that was, what, a year and a half ago. What's been happening since then?
Yeah, it seems like a lot has happened. We were just thinking about, I think you're right, it was about 18 months ago that we put together this really extensive white paper on autonomous vehicles. And I think our readers were really surprised at the time at how the report really provided some realistic expectations and took away some of the hype that we had all heard about self-driving cars. So while we were all really impressed with all the technologies from Waymo and Tesla and Argo AI, and all the venture investing has been really up the roof on the funding side, we did see that in terms of the actual deployment of self-driving cars on the roads were pretty limited. I think that in terms of level 1 to 5, 5 being the full autonomy, at the time level 3 was where we were at. Mm-hmm. And today, I would say that hasn't really changed very much. And that's probably due to regulations, right? So you're looking at, we need some type of a standardized regulations. I think the ride-sharing autonomy cars have advanced a little bit further because there's a less regulation in that aspect. But in terms of the actual consumer-focused self-driving cars, you're still not seeing that accessibility. Innovation's there, and the technology has actually really advanced if you look under the hood. So at CES this year, you got to see all the automakers. They're very vocal and ambitious. They're trying to compete, obviously, with Tesla. And it was really interesting to see that even a company like Cadillac and Volkswagen, they all believe that they're not really an automaker. They're actually a software company. Mm-hmm. So you saw what sort of the biggest takeaway from CES is that not only are they a software company, but they're also giving you this little mini data center in a unit, just happens to have wheels. So every company came out with this really slick solution without any steering wheel and very minimum control. Where are we in terms of actual having this access? I don't think that we're going to be able to get this anytime soon. But I would say from the time that we wrote the white paper, where we thought our consensus at ROBO Global was that it was going to take about a decade in terms of actually having this for purchase for a regular consumer, right? But now looking at where the automakers are going and how quickly they're advancing and the type of investments that you're seeing in technology, the sensing technology has really improved. The chips have really advanced. Mm-hmm. So you're seeing this connectivity that's happening, really easy interface. And I think the integration of software has really vastly improved. So I would say that from the time that we wrote the white paper, we're actually maybe 5 to 7 years away, which is really, I think, a pretty big advancement. And that's because of all the excitement and the investing around it. So it's a very exciting time, I think. And in terms of the enterprise side, you are still seeing the self-driving kind of forklifts happening and indoor drones that's on the manufacturing floors and also on the distribution center. So that advancement is happening at a full speed. So Lisa, it really is an exciting time.
Lisa, do you think that during this time, because there is regulation and even though they might have slowed down one part, but the timeline, 5 to 7 years, do you think Tesla has maybe even built a little bit more of a lead, because even though it's not level 5, they have so many drivers out there doing their, just driving and putting the car into self-drive when they're on highways, and they're collecting all that data. And in the end, the data is key, especially with something like this.
Yes, I think you're right. And that's a good point, because I think what people don't understand is that AI, building and training data and having AI's capabilities to improve over time is really hard to do. And it's going to take time. So you can't just be a new entrant in the marketplace coming in and making a big splash. So Tesla is still ahead of everybody else because of the data that they have right at this moment. But I do believe that in time, with the right type of investments and having a really extensive AI researchers really helping out with the software side, I think there are other players that could really catch up. And I think that market is trying to figure out as to how much of a lead does Tesla really have? Do they have a year ahead or 3 or 5? Okay. We think that what would be really interesting going forward is that, are we going to see consolidation in the space? Are automakers going to buy software companies? Is Tesla going to get acquired? Who knows? But it is probably easy to kind of predict that the advancement is happening, and whether you guys want the autonomous car today and whether it's ready or not, it's coming. And I'm personally a tech geek, so I'm very excited about it.
Well, and let's talk a little bit about, okay, so on the auto manufacturer side, you've got kind of this race to bring something to the consumer. You also have, as you mentioned, there's that rideshare side. And, in your white paper before, you were really kind of talking about Waymo, whose parent is Alphabet, of course, and how they had a lot of those kind of software advancements. Now, they're not wanting to get into auto manufacturing, but they are kind of coming up with like the picks and shovels, I guess, that a lot of the auto manufacturers will need for this autonomous driving. So where do they stand now?
I think that they're continuing to be advancing. They're being super quiet right now because they're trying to navigate through regulation. They're the first ones to really come out with their autonomous software, right? So I think that they're trying to be really cautious in terms of the type of impact they're going to make. So they are quietly still rolling out in parts of Arizona. So the ride sharing program is real. It's happening. It's happening in California, and it's happening selectively throughout the country. But they have actually have stopped going to the media and talking a lot about it. So they're still doing autonomous vehicle type of conferences and participating in panels, but they're being really quiet because they really don't want a lot of negative PR and attention at the moment. So, but I think in terms of advancements, we do have the advancements in sensors and computer vision technologies, and the cost is coming down. But the big powerhouse and where the big market opportunity really will be in the consumer-focused autonomous cars. And right now, you still need some type of your hand on the steering wheel, which is really not autonomous, right? So you're going to still have a lot of investors and people that's following this technology being really skeptical. But looking at just from a technology lens, I could see a lot of exciting things happening. Venture funding is still very strong in this space. Enterprise use cases also expanding in terms of farming equipment and lots of drone capability. So that has been totally, it's been unstoppable in terms of investments around it and advancements.
So Lisa, you're a portfolio manager, you're an analyst, and obviously you're like a lot of other people of understanding this larger trend that's going to eventually happen. For investors and for you, how do you position yourself to really start to get the pieces in place to really profit from this trend?
Yeah, and I think because we're still in the early stages, I think that the best way to probably capture this is to either invest in index strategies that's capturing some of these major disruptions, innovations. So you're not completely centered around autonomous cars or just on gaming. So you want exposure to all the emerging technologies. So we have a strategy, THNQ, that's a pure play AI focused companies that are enablers and developers, and also companies that are using AI capabilities. You could also invest in chip makers that have exposure in artificial intelligence and data center and cloud technology, companies like NVIDIA, AMD. So that's also another way. And you could even go broader and look at companies like Microsoft and Apple as well. So I think that there are many ways to capture this exposure and to actually profit and grow from this emerging trends that we're seeing. That's really not something that we believe is a fad or a hype. We believe that this is a multi-decade type of innovation that we're about to see.
Mm-hmm. Now, you mentioned a little bit earlier about how there's some of the places where the money is flowing into venture capital, and this is not so easy for a regular investor to invest in. You know, you either have to be accredited, or sometimes an even higher threshold in order to participate in that. So, with so many of this new technology and a lot of this merger and acquisition activity going on, what about the venture capital side? Some of these companies that are private or maybe not accessible.
Yes, I think that for the average investor, you are probably limited in terms of which private companies you could participate in. There are a lot of different platforms where you could participate as an angel investor or through your alumni connections. But for the most part, if you're following this space closely, finding companies like Microsoft and Apple that's really gobbling up a lot of these small technologies, and also even looking at chip makers that are really defining themselves as a leader in, let's say, artificial intelligence, computer vision technologies. Companies like Umbrella, for example, they're not a household name at the moment, but they are really building an asset around many technology capabilities and finding a lot of great companies to acquire and also partner with. So you'd be really amazed at some of the kind of venture activities that some of these companies have in their corporate venture side. So we track every company through private to public and even looking at the venture activities. And you're starting to see a lot of tech companies or even manufacturing industrial companies having a venture arm. So if you're investing in a company like GXO or Zebra, you're also going to get their venture part of the business, which also has a portfolio of private companies. So that's a very exciting way. And I think that's a different way of looking at some of these technology leaders that you may have never looked at them in that kind of angle before.
Mm-hmm. Well, yeah, Lisa, you brought up Umbrella, and Umbrella is, I mean, they're a good example of a company almost reinventing themselves, right? They had the chip that was used in the GoPro, and then they evolved into this computer vision company that's well positioned for self-driving. What were some of the steps that they took? Was it through the venture? Did they acquire some of the computer vision companies to help them do that? Or was it kind of like an internal strategy?
I think it was an internal strategy with some leadership that said, you know what, we can't be focused on just one aspect of a consumer or electronic space. So they've decided to really have a complete shakeup in terms of their shift in strategy. So now they have really hired a lot of the experts and developers to really build out their AI team. So they are now really well known in the industry in terms of computer vision technology and going into the enterprise sector. So I think that really changed the way they were being valued.
Yeah.
So at this moment, they're partnering up really heavily with all the relevant software companies, whether emerging or not. So they're really building their portfolio and also credibility in the space. They're still known as a computer vision technology company, but broader than just consumer. And I think that was something that they learned when the consumer sector declined, that they were really exposed to that just one segment of the group. So now they're consumer, enterprise. Many companies that we follow, whether they're private or public, really want to partner with companies like Umbrella. So they really changed their branding and positioning. So we're really excited to see where they're going to go from here. But we also think that the industry will further consolidate. So Umbrella could be a really good takeover candidate at some point to someone. Because as you guys been following the space for a long time, semiconductor industry is just so acquisitive industry.
Yeah.
Yeah, and it seems like that's something that we should probably talk a little bit more about, because certainly with all of the AI, semiconductors, I mean, that's been one of the strongest groups. So I think there's a lot to talk about but let's go ahead and save that for the next segment. Stay tuned. We'll be right back. Kicking yourself for that early exit? You can prevent them, and it's easier than you think. Go to freestockcoaching.com to see the tool independent traders are using to perfect their trades: artificial intelligence. AI doesn't involve staring at your screen for hours, and no research is needed. Just pick a stock and press a button. Visit freestockcoaching.com to see a live demo now. You need to be ready for rapid market changes, and AI can help you avoid potential losses. Check out freestockcoaching.com to learn more. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Welcome back to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen here, along with my good friend Irusha Pires and our special guest Lisa Chai, a portfolio manager and analyst at ROBO Global. So, Lisa, we were talking a little bit about AI and how critical that is. Building that data and getting all of that machine learning in there for the autonomous driving. But let's talk a little bit more outside of autonomous driving. What else is exciting and going on with artificial intelligence?
I think right now you can't really escape what you're hearing about Metaverse. I'm sure you're getting a lot of calls, and we're getting a lot of calls from our readers and audience investors on what is Metaverse. And what's really interesting is that Metaverse is nothing new. It's been really around probably for the last decade or so. It's just been loosely defined as maybe 3D virtual reality, augmented reality. But what we do know is that it is sort of the next big step in the evolution of internet technology. It's basically a digital technology where the digital and physical worlds sort of come together. So it is very cutting edge. It's got a very big AI component to it. In enterprise sort of use cases, you've probably heard terms like digital twin, and that is some type of metaverse technology. So there is a metaverse world in the gaming world. There's a metaverse world in the enterprise world, whether you're building a smart factory or helping a technician help solve a problem in the equipment, or even designing a smart city. So that metaverse term that you're going to start to hear it is going to be loosely defined, but also it's evolving at the same time. And we think that's really exciting because while it's been around for a while, we are seeing some real innovation technology and really strong kind of use cases being built out.
So Lisa, is it really going to become as big as everyone is thinking, where we're all going to be walking around outside with headsets on?
Well, that seems controversial, right? There's a lot of different people saying different things, like this is going to be the next big thing, or this is going to be the biggest flop since Second Life.
Yeah, I mean, I love talking about it and reading about it, but I don't think I personally want to be in the metaverse universe all the time.
Right.
But I do think that the most valuable companies in the world are investing very heavily.
Yes.
So more and more each week, there are more players coming to the space and talking about it. So we had Microsoft report this week, right? And they talked about how Metaverse is a very important strategy for them. And I don't think a year ago they were using actually that term Metaverse. So you're starting to hear CEOs talking about it, and your coworkers and your kids are going to talk about it. So I think it is now here to stay. It's not going to go away.
Okay.
And I do think that more and more our times are going to be used in this type of virtual reality setting. And as long as we use it in a way that's productive and socially conscious and aware, and how this type of technology could really impact us, because there are going to be a lot of implications. And I think it could be entertaining, and I think it could also be very helpful if you use it properly in a business setting. So there are many use cases that we could touch on, but I think the gaming sector is probably the most exciting part right now, and probably the most advanced.
Well, since you mentioned Microsoft, just very quickly, because they even though maybe they're just starting to mention Metaverse, the term, they came out with that Hololens a number of years back, which was really mind-boggling when I saw kind of demos on that. And maybe, I guess, within industrial companies it's being used, but yeah, I think they were hoping that was going to be much larger applications towards retail people too.
I think so, and I think they struggled with bring the cost down to build the HoloLens. And I think that was their problem, is that they were still a couple $1,000s a headset, and most people can't really afford that.
Right.
But the business users were using it. I remember going to a trade show by one of our portfolio companies, PTC, and they actually allowed me to do a demo where I became a worker in a water treatment center, helping out a technician how to move the equipment. So that type of having, and that's not really an avatar, it's more about simulation. But that type of interaction, I'm sure, was really extremely helpful during the pandemic when we were all locked down and some of the remote workers couldn't get to some of the locations. So these type of use cases has been around, and obviously Microsoft partnered with some of the technology providers to provide a HoloLens, but it was never really that available in the consumer selling unless you were a major gamer and you were spending much of your discretionary income building out your game room, right? So most of us did not have access to it. But now you are going to see more competition, and the headsets are getting lighter, more advanced and smaller. And maybe it won't be so bulky, taking up half our face. And maybe we are gonna bring it to our work and have some type of interaction. Microsoft also talked about building out their team capability. And as you know, team is something that competes with Zoom. And could you imagine after interacting with Justin, you're able to put on your glasses and have your avatar engage with Justin directly. So this is sort of their vision, is to have that employee engagement with each other. So they have very ambitious plans on how they could roll this out in an enterprise setting.
And I mean, again, as you said, it seems like Metaverse has definitely become the big buzzword. Certainly once Facebook made their change in name. I should also mention that we actually had Alexis Garcia on the show not too long ago, and she's one of the Investors Business Daily reporters, and her first podcast, Growth Stories, was on the Metaverse. I'm bringing Patrick Seitz on there, so we've got a little bit more of this business sense, but you certainly seem to focus a lot on the gaming part of things. So maybe we should talk a little bit about gaming. And I mean, just this week we had news. You keep on mentioning Microsoft as a player here, and we had this acquisition news with Activision. So what's going on in the gaming space as it relates to artificial intelligence, Metaverse, and all of the things that you do your deep dives on?
Gaming space is super hot right now. I think it's been hot for a few years, and the consolidation has really been active. But in the last few weeks, you saw Zynga getting acquired, and you saw Activision getting acquired by Microsoft, and that was Microsoft's largest acquisition by far. And it's also the largest technology acquisition. And so that's really interesting to have a largest technology acquisition be Activision, right? A company that has games and franchise like Call of Duty and Candy Crush. So obviously, it's their mobile gaming side that was also very interesting. That's a moneymaker. But also the Metaverse strategy was also a key factor for Microsoft to bring some of these platforms into their system and have their HoloLens capability as well. So they have very big ambitions as to how to bring this content alive. And it was a very key discussion on their earnings call as well. So this really, I think that it's really showcasing as to what 2022 is going to look like. I think this is not over. We're going to see more acquisitions coming. I think Electronic Arts is going to be active. They still have over $3 billion in their cash balance to acquire some game studios. What's really changed in the gaming world is that traditionally you saw gaming companies getting acquired for their long-term franchise. These are traditional games. Yeah. But now you're starting to see some of the smaller studios and development teams getting acquired. So now some of the gaming publishers and platform companies like Microsoft are going right into the creators of the content. And that's something that you didn't really see in the past. And the valuation is really high for the gaming space. So you can see that this is an area that's super hot. There's obviously market opportunity here in terms of the TAM and the growth. So, and we think that mobile side is going to be very interesting. Just last year alone, $80 billion of revenue was generated on the mobile gaming side. So, which is shocking because most of the mobile games start out as free to play. And that's a really, we think that's really misleading term, right? Because it's free to play for 3 seconds.
Yes.
With in-app purchases, right?
Yeah. And then you're spending $22 for 40-minute game because you have to upgrade to stay in the game.
Yep.
But it is very addictive and everybody plays, and it's something that you could play on your smartphone. And I think that's sort of the reason why you're seeing this big growth coming in that business. And Microsoft's revenues and earnings report indicated that that the gaming side, while it was a very strong area, it wasn't from their Xbox. It was really from the actual gaming publishing side and also the mobile side.
Now, Lisa, with now the other player, I mean, we touched on a little bit, but with Facebook, especially with Metaverse, they're one of the larger players in this, and probably forced Microsoft to go after Activision to try to get a little bit more into that space. First, I was kind of surprised that Facebook didn't really try to get Activision, but I don't know about you, but if you've ever tried the Oculus, but when we tried it at work, one of our co-workers brought the Oculus a couple of years ago and it was. I mean, it was one of those kind of things that when you try it on, you're like, okay, everything's kind of going to change here. So it might not be with this kind of model, but someone's going to figure it out where it gets light enough, because it was so much more engaging, so much more immersive. Where do you see like a Facebook going now? Do you think that they maybe go for another kind of publisher to acquire, or get a little bit more aggressive to try to combat Microsoft?
I think they definitely have to, because I think you have to own the whole stack. I don't think you could just have a hardware capability and just have some AI algorithms. I think you have to also own the content. And I think that Microsoft has figured out in terms of business model.
Yeah.
And they just have the experience from their enterprise business and how to make the business models work. What Facebook has done is they're very ambitious and they're very vocal. They've hired some recent talented people that are industry leaders in immersive content, and also PhDs in computer science that come with really strong AI background. So they've been very aggressive in building out the team. They have over 400 AI researchers just dedicated to Meta alone, Metaverse technologies. So they're very committed and dedicated. They believe that future of social media is all about gaming, and they really want to own you. So at the end of the day, the most valuable company is really going to be a company that figures out how to own our time. It's the most valuable thing that we all have. Right. And they're just fighting over as to who's going to be able to take my time. They want to take full hours of my time, whether I'm looking through Instagram or Facebook or playing their game. So that's a lot of time. But we don't even know who's really taking their time, because of the names are all different, the branding, the logo. So it's really hard to tell as to what you're kind of doing. However, Facebook is dedicated. They are spending over $10 billion a year just on Metaverse alone. And that's huge. So the Oculus 2, which I have at home, it's a really great experience. I could be a boxer 1 second. I could be a wide receiver, right, playing my NFL game. Yeah. And I could also go camping and put my tent out. And this is all through that immersive experience. Their Oculus 3 that's going to come out is apparently going to be a lot smaller form factor. It's going to be thinner. Probably will be good for people that could, play the game a little longer, because right now, currently, still the headset's a little heavier. Right. So you're going to see with that $10 billion type of investments a year that they're dedicated, you have to see much more improvement, advancements in the headset, so we could have this better digital experience, right? So I think that we're definitely going to see that today, Facebook is way ahead of everybody else in the race at the moment with Metaverse. And I think Microsoft is next as number 2 provider, especially with this Activision. And then you got companies like Apple, who's super quiet about it. We know that it has to do something with subscription fee and something with their iOS and their iPhone. But they've been very quiet about what their Metaverse strategy is. So I'm sure they're going to come out and make a splash as well. But I do believe that this is just the beginning in terms of the headline news and consolidation, acquisitions, investments. I think that Facebook started it, but it's an area that we believe that even companies like Amazon is going to be very active. So stay tuned.
What about like a Roblox?
I think that they're probably going to be one of those companies that's going to be acquired,
Okay.
right? So you're either going to be an acquirer or acquired. And I don't really see the space being dominated by more than 5 players. And you're obviously going to have some smaller industrial technology companies that have a metaverse technology for the factories or for digital twin. But the real players that's really going to be adding a ton of value and building out the entire technology stack are companies that have a big war chest of portfolio of content and technology, and also cash so they could actually spend without investors getting mad at you, right? So if you're an industrial tech company buying, building out AR, VR headset, investors aren't going to like that.
Well, certainly a lot of exciting things to talk about. Again, I always love having folks on from ROBO Global because it just feels like sci-fi. Really gets me excited and reminds me of my youth. So just as a reminder for folks, THNQ, that's one way to kind of participate in the artificial intelligence. As you said, Lisa, this is something that we're probably in the early stages of, but it's not necessarily a get rich quick. This is something that's potentially developing over a long period of time, right?
Yes, exciting.
Yeah. Well, great. Thank you so much for coming on the show again, Lisa. And we'll have to have you on again because this stuff is moving very fast. So we'll have to get your update a little bit quicker than 18 months, I think.
Yes, great.
Okay.
I love to be back. Thank you.
Okay. And when we come back, Irusha and I are going to take a little bit of a look at the market and a few stocks that may be on our radar. Stay tuned. Why trade off hope and optimism when you can trade using the world's most powerful indicator? Artificial intelligence has been used by traders to navigate the markets for the past 3 decades. Visit freestockcoaching.com to see the world-leading AI forecasting software for yourself. Trusted by more than 32,000 traders, AI uses millions of data points to track market trends, giving you the support you need right now. Go to freestockcoaching.com and we'll help you find great opportunities today. Our experts will show you what stocks are setting up for big changes right now. So head over to freestockcoaching.com for a free demo. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Okay, welcome back to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen here, along with my good friend Irusha Peiris, and we're going to talk a little bit about the market right now and some stocks, but let's go ahead and start with maybe the market. We had a Fed meeting today, very volatile Monday. The reversal just looked really kind of impressive. I mean, we were down on the NASDAQ composite 4.9% on Monday, and then we closed positive by 0.6%. Yesterday was an inside day, and then today we had the Fed meeting, and things were looking kind of positive. NASDAQ was up over 2%, and then the Fed meeting happened. Pretty good reaction at the start, and then it reversed as the press conference continued. So Irusha, let me ask you. So 11 o'clock Pacific time rolls around, Fed meeting is coming out. What's your strategy? Are you sitting there with your finger on the trigger, ready to take some action?
Yeah, well, for that first minute, right? And you can see with my hair is all messy because I was trying to watch the intraday action, the intermittent action of the market right after the Fed. And so actually, the more you watch it, and this is what I've found from Fed announcements, is everyone just gets amped up. You're like, oh, what's going to happen? And your first inclination is to do something, right? If the market starts really rocking up, oh my God, I'm going to miss out on this rally. Over the years, I've learned the hard way not to do anything.
Yeah.
And that these days, and actually what I did this time around is I just took a look to see what they did, what they announced, and what they said. And then I walked away and had lunch because I know I'm going to mess it up.
Probably the best idea.
Yeah, exactly. I mean, I saw the NASDAQ was up like 3%, and then all of a sudden I got all these messages on Teams and stuff like that, and I was like, oh my God, it's rolling over. I was like, okay, now here it comes back down. And yeah, I think I made the right choice.
Now that's because you probably have low exposure right now.
I have low exposure, but you always kind of feel when it was up. I'll tell you when the NASDAQ was up more than 3%. I had that, Jared Hendler was talking about last week, that fear of missing out.
Oh,
right?
yeah.
I kind of was like, oh my God, I'm going to be left behind. Everyone's going to get rich, except me, and so I kind of had that itch that I wanted to do something. But I've just seen it. I've seen this enough that a lot of times, and this is just kind of my own experience, and is that it's going to react one way, and then by either later that day or by the next day, it does the opposite. So if it starts really rallying up and you start buying stocks, especially if they're extended, you think they're just going to keep going up. The next day, they're giving it all back and you're losing money by the end of the day there. So I like things to settle down. It made it a lot easier this time around because we are in a correction.
Right.
Tomorrow is when we could get a falter day, not today. I mean, if we had a falter day today, they would have been a little, if this was the fourth day, and because the markets were up even before the Fed announcement, they were up more than 2%. And so it would have been reasonable for us to expect, oh my gosh, we're going to go back in an uptrend. I should look for something to buy. We're going to get a falter day. But luckily it was only day number 3.
Right. And, we do sometimes talk about these third day follow through days, these rare cases, but usually that's when you have a lot more power on the first and second day. And we just didn't get that on the second day. We should probably take a look at the S&P 500 because one of the things that we were noting on IBD Live this morning was how it looked like the 200-day moving average line was potentially resistance. We hit that early in the session, came back down from that a little bit, but we're still well into positive territory. Hit it again after the Fed announcement, and then things really got ugly from there. So is that 200-day line, is that a place where you'd like to see the S&P 500 get back above that line?
Yeah, it'd be nice. That would be the first step. One thing that we learned early on, and Scott O'Neill would always kind of talk about this, like every day the market will reveal another card. They'll kind of flip another card, giving you an environment. It flipped another card to add a little bit more evidence to we're still in a bad market right here. Maybe we're in a bear market. We've definitely been with a number of growth stocks in the bear market, but now maybe you're starting to see the rest of them that were hanging in there starting to go into more of a serious correction. And the reversal today was not good. But you want to keep an open mind though too. You still could get a falter day market and uptrend tomorrow or any of these days starting from tomorrow. And then you look for something to buy. So you don't want to necessarily lean one way or the other, too bullish, too bearish. But that being said, the 200-day does look like, at least for this week or the next few weeks, like some kind of significant resistance.
And, I wasn't on IBD Live today, but I kind of did the voiceover work for a little bit. And one of the points I was making is how flexible the founder of Investors Business Daily was, Bill O'Neill, of course. And, I just shared multiple stories in my time with him where, he'd seemed so bullish on a stock. We were talking about eBay, and then all of a sudden he's like not talking about it anymore, or he's super bearish. And I shared a story of where he was sending letters to clients, 500 clients, about how bearish he was in September of '99. But then in October, he's buying, because there was a follow through day. So I think that flexibility, I always think of those trees that you see on like the cliffs where the wind, has just kind of made them,
all kind of all
yeah. They're all, you can see which way the wind blows. And again, that tree has kind of formed itself. It's been flexible enough to go with the way the wind has blown instead of being so rigid. That's where things break.
Yeah, no, I like that. I think the big thing is it doesn't have to be all or none.
Right.
You can slowly move in, slowly move out. These rules are here for a reason. So even though, say we got a fall today, this market signal tomorrow or next week, that would tell us that the market has a chance to go back in an uptrend. Yeah, my initial inclination is that there's no way that signal is going to work. Just because with the way so many stocks have gotten hit, it just tells me that it's going to be a lot of time. That's going to be needed for those growth stocks to build new bases. That being said, though, I will still look for something to buy. I will still look to get some exposure if we get that signal. Simple, and even knowing that I'm probably going to lose money. But the reason I do that is because it's kind of like back in April 2020. I was 100% sure that signal was not going to work.
Right there with you. I'm
Yeah,
like, there's no way this is going to work.
Right.
But it did.
And it worked, and it worked, and it worked, and we had this incredible, unusual V-shaped rally. So you never want to lean too far to one side or the other. Just take it day by day. Let the market tell you what to do, and then in the end, also let the leading stocks or these growth stocks give you an opportunity to get exposure when they are breaking out of sound patterns.
And it's probably worth talking about a little bit. You know, a follow-through day, okay, that's one part of the equation. You also have to have merchandise to buy. You have to have those setups, and that's something that just doesn't seem like we have a lot of right now.
No, I mean, and we've talked about this last week. It seems like the one sector that we do have is oil. Oil is acting very, very well, and then there are a few others that we'll take a look at now. But it's in a different area than we usually like to be in. It's the commodities. It's not the growth stocks.
Right.
And so if we get that fall today, even though I like the growth stock, like we were talking with Lisa about all this exciting innovation, I'm going to be looking more to buy some commodities, and I might not be as as heavily invested in them and have as much conviction in them as I will with growth stocks. But I'm going to listen to the market, because in the end, the market's always right.
So one other thing I just want to mention before we get into some of those stocks that are potentially setting up is I did send out a tweet this week after that Monday reversal. Just so people kind of know what I did was I just pulled out NASDAQ data. I just quickly ran, okay, how many times did we close positive and have a pretty dramatic drop intraday? And I picked the top 15 where we had the biggest dramatic drop. And again, 4.9% was the case on Monday. And what happened afterwards? You know, where were you 10 days later? And where, you know, how often did you undercut? And I did share that on Twitter. Really kind of the takeaway is that this could be the bottom, but that doesn't necessarily mean we're going up. You know, it could be a lot of sideways action. This could be, you know, in a good case scenario, Irusha, you and I were talking about back in 97, you know, January of 97, that there was a reversal like this that, you know, it didn't go up immediately, but it did kind of base out a little bit. That allowed a lot of these setups to go. In May of 2000, you had a case where we did have a follow through day, and you actually had a lot of power up until August, September of 2000. A lot of people forget that there was a very tradable rally there. So if you do want to look at those 15 examples that I pulled out, and again, just put them in MarketSmith, change the date, you can find that at IBD_J Nielsen, Nielsen, like Nielsen of Leslie Nielsen fame. So, or Nielsen
Justin,
ratings.
you know, I could retweet it and they can just go to @Irusha.
Oh yeah, that's probably better. More people probably like you more anyway. So, but before I cry in my soup about how much people like you more than me, let's go ahead and talk about some stocks. And we can go ahead and start with some of the shipping stocks are still showing a lot of strength. So this is Zim Integrated Shipping. Support at the 50-day moving average line. And I got to tell you, the stocks that are getting support at their 50-day moving average line just look so different from the market right now. So what's your take on Zim?
Yeah, they stick out. They're showing Zim's showing some really good relative strength here. Now, I think for a lot of these stocks, what my strategy is, I want to try to buy more on pullbacks. So really on Monday, on that upside reversal, that would have been more the time that I want to try to get into this, instead of where I normally do, where I buy more strength. You have to wait. We're just not in an environment to buy strength. So I think that's one thing to keep in mind. But yeah, it is a little weird that this is above the 50-day moving average. The 50-day moving average is actually moving to the upside here.
Yeah,
the relative strength
still in an
line is very
uptrend.
strong. Yeah. Now it is. So I would consider it probably a little bit extended. Probably it's a little too volatile right now. So you want it to settle down a little bit. But this is one that should be on the watch list. We've talked about this in the past in the podcast on all of the IBD different channels. huge earnings, huge sales, asset light shipping company that's well positioned because there's not enough ships out there to bring all the goods over here. And so they're definitely benefiting from this large trend, and that trend could continue. But that being said, keep in mind that this has gone on a pretty big run from $20 out of that original IPO breakout all the way up to 60. So it could, if this market gets worse, it wouldn't be a surprise to see this maybe pull back, finally break the 50 and build a new base.
Mm-hmm. Yeah, and it's definitely not as easy as it was on that first run out of that IPO base. It's if you just go to the weekly chart, you can kind of see it was a nice strong move at the start, and then we've gotten a little bit more choppy here as we've been basing a couple times since then. Let's go ahead and talk about on the growth 250. I was running my screens, I was sorting, and
I'm sure you found some really great growth stocks.
Like well, I started with a sort of, hey, just what's just up today, and the biggest gainer was Archer Daniels Midland. Now, of course, they had earnings. Looks like they closed up 5.7%. So what does Daniels Midland do?
Well, I would say they do share the same 3 letters as AMD.
Right, there you go.
So that's probably the only growth-related thing this company has. They're involved in food. That's all. I just look in the industry group and say food, grain-related.
Like next.
I mean, they're a monster company, obviously.
Yes,
but
right.
This has been doing well for a long time. Over the last 4 or 5 months. I mean, they built a big cup with handle, emerged out of it. It found great support off the 50-day this week. And look at that relative strength lines. It is just at new highs right here. Well, and if you want to really look at it, because I know most of you are driving or working out while listening to this, go to investors.com/podcast, and you can take a look at the RS line when you're back at home. But this is acting well. It really sticks out versus the other stocks, most of the stocks that have gotten hit. The only problem is that, when you see like the food stocks start to outperform, that's not telling you that it's really, that's telling you that it's not our market right now.
Yeah. Group here, number 34 out of 197. We looked at Zim, that was number 13 out of 197. Here's another one that's right around the top 50, and again, not our normal area, but Travelers, ticker symbol TRV, insurance. This seems to be an area that's holding up relatively well. Of course, those the longer term yield increasing, that's going to help their business. But here again, this isn't a big mover. I mean, it's holding up well. You see that relative strength line getting higher, but it's typically not one that has any big moves.
Yeah, a lot of times if you want to learn about the character of stock, just look to the left of the chart, look at the history, and you can see that Travelers doesn't, it's in a pretty tight range. It goes down to maybe around 110, goes up to 150, and kind of just oscillates back and forth there. And this has been for years. It's just been kind of hanging out around that range right there. Now it is an all-time high. It's at 167, so that is significant. But it is being accumulated, and people are trying to hide in the stock. And so This is not necessarily a company that is changing the world or reinventing themselves. It's a company that's a good business that now we're in an environment that is not rewarding high growth, high valuation type of stocks, and they're rewarding more conservative, good, solid companies that probably just give you a nice little dividend.
Let's go ahead and also talk about the optimism. Again, if you have raised a lot of cash and you are on the sidelines, this is great. Irusha and I often joke together how it's almost like on a day on Monday when you're down 4.9% at the lows, you're kind of like, burn, baby, burn. Just, get it over with, get all that destruction done so that I have my next opportunity to put my cash to work and, have another great year.
Yeah, the markets aren't always going to give money, right? The windows are not always going to be open. And so when you learn to respect corrections and when you learn how to handle them, you can just stay on the sidelines, let everyone else kind of get shaken out and try to pick the bottoms and things like that. But there's going to come a time, we don't know if it's next week or in a few months or even next year. But there's going to be an incredible opportunity, one of the best opportunities that we'll see since a couple of years ago, where great growth stocks, innovative stocks, like Lisa was talking about, are going to set up, and they're going to give us an opportunity to get into them, and they're going to work really well.
Yeah, and the harder the market falls, a lot of times, the bigger the bounce. I mean, that's just Newton's laws of physics right there. So that'll be it for us today. Thank you for joining us. And don't forget, we've got a lot of stuff going on at investors.com. I know that Ali Coram and Alexis Garcia that we mentioned earlier, her growth podcast that she's got going on, and we had her on the show a few weeks ago. They both have YouTube channels out now, so you might want to check those out. I know they're kind of giving you some behind the scenes looks on what they do and their learning process. So definitely check that out. And we hope to see you here next week on our podcast, where Irusha and I, we're not going to have a special guest this time around. It's just going to be a little bit of we time. So we'll shoot the breeze a little and talk about the market and any lessons that we might be able to take away from this correction or ones from the past. Hope you tune in for that. Thanks for joining us this time. We'll see you next time. Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.